Well, we hear about the Fed intervening in the U.S. dollar and the U.S. economy with quantitative easing. We're here to talk about that today with Kathy Lien. Kathy, thanks for being here.
My pleasure.
Well, first of all, what is quantitative easing?
Wow, it's a big word that encompasses a lot of different things. I mean, it's basically all of the extraordinary measures that the Federal Reserve takes, or any central bank takes for that matter, to stimulate the economy when interest rates have pretty much gone to zero. So in the case of what we're dealing with right now, a lot of people are looking for the Federal Reserve to implement QE2, Quantitative Easing 2.0. And what that would involve is essentially coming into the markets and buying assets. And that, in essence, puts money into the markets and then sort of eases or creates more stimulus for the economy.
What opportunities does that present to us as currency traders?
Well, quantitative easing basically is an initiative that is considered a very dovish measure by the central bank. So because it's a very dovish measure, it tends to be bearish for the currency. So in the case of the Federal Reserve, it would be bearish for the U.S. dollar because easing means that they're going to be much further behind the curve in terms of normalizing monetary policy. So the whole idea is the dollar is falling right now, and it's going to fall as long as the Federal Reserve is actively considering QE. We don't have the next FOMC meeting until November, so there's a good chance the dollar could remain weak until then. So the opportunity for currency traders is that if there's a rebound, you've got the other forces of QE pushing the dollar down, that maybe it'd be a good idea to enter positions in the direction of QE ahead of the November FOMC meeting.
Now, we've got the Japanese doing intervention on their currency. How does that play with the U.S. doing their quantitative easing at the same time?
Very good question, because when you have the Federal Reserve doing quantitative easing, it's dollar bearish, right? And then if you have the Japanese government coming in to intervene, they're selling the yen and they're buying US dollars, so it's dollar bullish. So it's like a counteractive effect that really is neutral for the dollar. But in reality, it's not, because even though Japanese yen intervention is important, what is even more important is the market sentiment towards US dollars. So traders will continue to test the resolve of the BOJ by pushing the dollar and pushing dollar yen lower, even if they intervene. So it'll create a lot of volatility in dollar yen, but usually it's the dollar sentiment, what goes on in the US dollar, that typically wins.
Kathy, thanks for your time.
My pleasure.